welcome everyone to our virtual brainstorm. This is the third one we've done as IDEO CoLab Ventures. And we're excited to have a really exciting group of panelists today to talk about crypto and banking for the next billion users. As per usual, we'll start off with a short presentation and then jump into a virtual brainstorm right after. So there's a link below. Don't worry, we'll do it again later. So excited for you guys all to join us and feel free to jump in. And Joe Gerber is the co-host for today as well. Joe, do you want to say hi?
Hey everyone, how are you? So one thing, just if you haven't done one of these with us before, you can raise your hand in the Zoom app, and I will try to call on you and let you speak up. And it will explain how to get into this URL at the bottom here for the tiny URL Billion Brainstorm. That's where we'll get into Figma in a little bit. But first, let's maybe introduce the panel.
So today,
yep,
go ahead, Joe.
No.
Well, you go ahead. So you're first on the list.
Oh, well, I'm Joe Gerber. I'm Managing Director at IDEO CoLab and excited to chat with this esteemed panel.
I'm Tara. I'm with IDEO CoLab Ventures as well on the investment team. Excited to be here.
Hey guys, I'm Dave. I'm a program officer on the financial services for the support team at the Bill and Melinda Gates Foundation.
Hey guys, I'm Simon. I'm the co-founder of Valiu, which is a fintech startup in Latin America.
Hey everybody, my name is Will. I'm filling in for my colleague Sochi, and I work on a project called Celo, focused primarily on growth and go-to-market.
Very cool. So do you want to kick us off? We're but just before we, just a quick intro on IDEO CoLab Ventures. So we've been working and investing in the blockchain space since 2015, pretty much, as the same team. And, we've done everything from working side by side with early stage protocols and startups to ship first versions of product to investing in them. And a year ago, we started a early stage venture fund that invests in early stage startups. And just for full disclosures, Valiu is one of our portfolio companies.
So I'll share a little bit about some of IDEO's work in the financial services world and specifically in the financial inclusion space. So we've been pretty fortunate to get to work with Dave quite a bit. We have something called the Last Mile Money CoLab, which is focused on equitable digital money. And we've been doing things like creating digital competence toolkits with partners, but also IDEO generally has been doing a lot of work in this space. Dave has worked with IDEO.org on the Women and Money initiative, which you can check out online, trying to understand the needs of people on the ground and translate that into action. So, and that's all in addition to IDEO has been working in financial services for most of our 40 years. I think maybe one of the projects that IDEO is famous for is Bank of America's Keep the Change program, which was kind of like acorns before acorns, rounding up checks and things. So on that Last Mile Money program, CoLab, there's a theory of change that I think is pretty relevant for this conversation. And the end state is an equitable digital money economy. And there's three steps, big pillars that we see to get towards that. The first is digitizing commerce. So extending the entry and exit points to digital money, the on-ramps and the off-ramps, and the reasons to keep money digital. So we'll probably talk about this, but a lot of folks in emerging areas go to cash as quickly as possible, even if they have bank accounts. And so I think the part of that is because there's no value proposition to have digital money when you're for those folks. The second is to foster digital confidence. So more and more people across the world are now having internet connections and smartphones, but they're not yet confident in using those tools to interact with their money or otherwise. And so we want to equip people to do that. And then finally, creating shared networks. A big problem in serving the last mile is the cost of service and the ability to actually do distribution. So shared networks are really important ways to make the business model work for a lot of these products and services. And we think that, you know, with this panel, we'll have lots to say about that.
Cool. So, you know, with the recent news, I think we found ourselves in a pretty turbulent economic climate, you know, and sort of the long-term opportunity, I think, with emerging markets is that they could have a higher growth rate than developed countries, and this is a sort of long-studied process. So I think there's tons of opportunity in emerging markets, and I think we have a couple of experts today who can share a little bit about what it is like, you know, being on the ground in these places and seeing how sort of new forms of money and community are springing up. You know, but with today's economic climate, there's obviously a lot of short-term risks, and I think our panelists will go into that again. You know, for example, an increasingly strong dollar that's sort of dominating in certain markets, disruption of global trade and supply chains, pretty drastic monetary policies that could lead to instability, as well as, you know, potential losses of jobs and unemployment. But, you know, I think there's something to be said that we're all in this together. You know, emerging markets account for 60% of the world economy on the basis of purchasing power. And I love this quote from the New York Times. It said that a slowdown in developing countries is a slowdown for the planet. So I think that's something to think about and something to carry with us as we you know, sort of step into the new, is that, you know, we're all in this together. But, you know, just quickly, I just wanted to jump into a couple of examples, and I think our panelists will share a lot more about what they're seeing on the ground. But we're seeing really interesting trends over the last couple of years in the intersections between money and community, right? So, for example, this is a really great example I love of Taobao villages, which are rural e-commerce villages in China that have sprung up over the last, you know, maybe I think 5-6 years. And it's really part of a nationwide movement in China to lift rural communities out of poverty. So what this means, what a Taobao village is that where its village residents band together to, you know, either become an e-commerce hub or do B2B retail as part of the Taobao marketplace. And it's super fascinating because, you know, we've seen hundreds of thousands of jobs created. And I think the total annual e-commerce transaction volume for each village is around 1.6 million USD, which, you know, goes a long way in these communities.
So another cool example of this that we're seeing, where kind of e-commerce and financial services are getting combined, is in Indonesia. GoCheck and Grab are these super apps that have built agent networks across the country. So one of the things that we're starting to play with is how you can combine the capabilities of these e-commerce networks with financial services companies to cover that last mile. And I think Simon can speak a little bit to this as well.
I think we'll hear a little bit from our panelists now, starting with Dave, about what they're seeing on the ground. So Dave, take it away, and don't shy away from telling me next slide, and I'll move to the next slide whenever it works for you.
Cool, right on. So yeah, let's start here. That's a nice place to start. Okay. So guys, again, first off, my name is Dave. I'm a program officer at the Gates Foundation. I'm a team called Financial Services for the Poor. And on this team, we have a belief that we can get more people out of poverty faster and have fewer people fall into poverty through the use of digital financial tools. And if we think about jobs that need to be done from a financial tools perspective, we like to think of it in 3 ways. One is managing your day-to-day. Second is thinking through your long-term income growth opportunity. And the third one, which is I think really relevant right now, is having a sense of resiliency so that you can buffer yourself from shocks. And if we're not living through a shock right now, I don't know what we're living through. On that team, we work across a number of countries around the world. So if you see some of the bubbles on the chart, you see that we work in 4 countries in Africa, 4 in Asia. In Africa, we work in Kenya, Tanzania, Uganda, Nigeria. And in Asia, we work in India, Bangladesh, Pakistan, and Indonesia. And I specifically work on 3 different topics. One is last mile financial infrastructure, which is making sure that as you go away from your capital cities or even your tier 2 or tier 3 cities and go into rural frontier areas, making sure that people still have access that's easy, affordable, and trusted to digital financial services. Think through broader innovation on our team. And thirdly, I think through our work on financial health, which I will safely say to the internet, it is my Trojan horse play to inspire better product and policy innovation in our space. In the next slide, what I'll do is that I was asked to tell a little bit about a user story or someone that we met. And just as a heads up, we did a global consumer segmentation study as a public good. So everybody and anybody can access it. It's at thehumanaccount.com. And what we did is that we looked at people's attitudes, behaviors, experiences, and preferences when it comes to interacting with money and technology in a number of places around the world. So definitely check it out. The one thing that I like to call out here is that when we were in Myanmar about a year or 2 ago, we met this amazing woman who's a rice farmer. But she is extremely resilient, extremely strong-willed and determined, and super happy to go her own way. So she's a rice farmer by trade. She, let's see, I mean, you think about how she interacts with money, there are a number of different mechanisms. One is she keeps her money at home. The second one is she has a savings group. So that's a group of around, like, let's say 10 to 20 different people who come together to have a structured savings or loans program. She keeps her money in a bank that's hours away. And the only reason why she keeps her money there is so that she can't access it, right? So that's kind of like the equivalent of putting your credit card and literally icing it and putting it in your freezer, right? That's one thing that we've seen. But her retirement plan is her forest of avocado trees. And the story here is that she saved up a lot of money to plant these avocados, yet there was a forest and they essentially just burned down. So imagine you have your nest egg, this is what you're banking on, and it just is destroyed by fire. At that point, she was at a crossroads, like what should she do? What could she do? If you watch this video and all that stuff, you'll see that she actually saved up money again and decided to replant, because that's also the type of person that she is. But I'm struck by the story because if you think about how fragile like all of our lives are, right? Both today, but also in the future, it's even more so in emerging markets, right? It can be a climate event that will completely wipe out your future. And that is, I think, one of the few cases where I think financial services can play a really meaningful role. So that's the reason why I want to share the story, and we can move on because I think it's a great story, but you guys can go check it out later. So in the next slide, so we were asked to talk about, hey, what was a big surprise that we saw during some of our work? And here, I would say the biggest surprise was the role of intermediation. My buddy John Wan, he has a great line that says, look, intermediated use is a reality. You can't just like hide it, you have to design around it and for it, right? I may have paraphrased him, he's much more eloquent than me. But in this space, it's amazing how intermediated use in a lot of the markets function in a number of different ways. One, it provides a conversion moment between digital and physical and back. It's still relevant. Even here in the US, I think last year was the first year where cash was not the primary payment tool, which is crazy, right? And if you go down to the small dollar bands, cash is still the primary instrument. The second one is that when you're asking people to make a jump from what they know into something that's digital and digital financial services, you're asking them to jump a lot. A lot of mobile money agents or banking agents can provide that human trusted interface to something that's quite ephemeral. So I think this was a huge surprise for us, but it's something that we're invested in and actually working really closely with Joe and his team on cracking this in a couple places around the world. If you go to the next slide, we'll talk a little bit about, well, in the time of COVID-19, like what are some of the things that are popping up for us? I'll just repeat a line that we had earlier in the sense that people's financial lives are incredibly fragile. And this was a study done in 2013, 2014 in Kenya, where it's called the Kenyan Financial Diaries, where researchers followed around 300 households for about a course of a year and measured every single shilling that came in, every single shilling that went out. It's crazy in the course of a year, how many households didn't get the medical care that they needed? Their kids didn't get to go to school and they experienced hunger, all for a need that was less than $1. Right, so I just want to, this is for me, my pissed off slide, because this is not an academic thing. This is people's real lives that we're talking about. And I bring this up because this actually took place 5 years ago. Now imagine it in a case now where social distancing is a reality, local economies are slowing down or shutting down. These numbers are only gonna go up. And that's really scary for me. In the next slide, and my final slide, this is essentially a screenshot of a tweet storm that Jimmy, from the CEO of Propel, sent out. And if you guys don't know Propel, really check them out. They do some amazing stuff for people who live, who get food stamps here in the US. But they have incredible data to see how people are actually doing. And if you think about what's happening, people, we know a few things. People lead and live very fragile lives. We know that over 70% of Americans are not financially healthy. 58% of Americans work hourly. 53% of Americans don't have emergency savings. Like, you can go on and on with these stats. But this is also what's happening right now. And people are hurting. And I just want to kind of pause here and rest it here, because I think this is a reality for a lot of us. And this is the challenge that we're trying to solve for. One piece here is that the Aspen Institute, they had this amazing series of policy notes that are coming out, worth a read. And Ida Rademacher had this great line that said, look, even if we are to give a cash transfers to households who desperately need that money, let's also make sure that we do the policy right so that we don't trigger some asset requirements or laws so that will kick people out of their SNAP benefits or things like that. So this is going to be both a product and policy play. Yeah, I'll just pause there because I spoke a lot and I can't wait to hear what the other guys have to say. Thanks, guys.
Yeah, that was great. I think Zoom puts me on mute, so you couldn't hear my reactions, but I was like laughing and crying at certain parts, and it was so great. So the video was humanaccount.com. Was that correct? Okay, great. Now we'd love to hear from Simon.
Thank you, Tara, and thank you, Dave. That was really interesting. All right, so I'm gonna tell you guys a little bit about what we do at Valiu, and maybe link that to the next billion users. And I'm gonna talk a lot about Latin America, Venezuela specifically, and the situation out here, because that's what we really know. As you probably have heard, Venezuela went through an economic collapse. So we now have around 6.5 million migrants in Latin America, and they all need to send money back home. The interesting part about the migration is that the people that are leaving are usually parents, our moms and dads, and the younger kids are being left in Venezuela. So what happens is that these parents that leave the country now have to support their family back home, and the need of sending money internationally has grown a lot. So all these people, you have a lot of problems now because they have to send money back to their families. Their families have to have a way to receive that cash. They usually spend it in food, medicine, and mostly food and medicine. But the parents, when they arrive to a new country, such as Colombia, Peru, Chile, and Ecuador, which are the main countries where they migrate to, they don't have, banks do not support them. So they don't have kind of like an entry into the financial system. And so they start working under the table, getting paid in cash. And so not only for migrants, but for most Latin American, mostly the Latin American region, cash is king. And so you have this kind of like, first off, I have to start saying that there's around 60% of people in Latin America that handle cash in great quantities. And so financial inclusion is an interesting term because even though they are not in the banking system or like in the digital banking system, there's still a lot of networks where cash moves around, and there's a lot of financial services that go around in these networks, almost like Hawala networks. So we are focused on helping these people send money to Venezuela, but at the same time, we're building the first kind of like US dollar financial institution because Venezuela was one of the most important, one of the second largest hyperinflation after Zimbabwe in history. And but other Latin American countries such as Argentina also go through a high inflation of 50%. Colombia, Mexico, Peru. Now with this whole situation of the coronavirus and with the recession, a lot of Latin American currencies are being inflated. So people's savings, if you're in the digital financial system or outside, if you're saving in the local currency, you're basically losing value and losing money, and you're becoming poorer. So Latin America has a lot of challenges ahead if we want to bring in all these people into the financial system, provide them stability for them, financial prosperity and stability, and at the same time, making products and financial services that actually they can use. And so I'm going to tell a story about Maria, who is one of our users, and then I can go into a little bit more like how to design for Maria, how to make products for her, right? So she's, as you guys can see here, she's 24 years old. A lot of the people that are users are already migrants, and they are outside of the traditional, they just get it paid in cash. She just arrived to Colombia from Venezuela, and she stays with a cousin, and she's basically could not make enough money working in Venezuela to save because the hyperinflated currency. So she's now working at a clothing store in Bogota and sends money to her mom every month. Basically what she have found through Valiu is that she, like, because of the other options or Hawala networks that are very slow and expensive, she really likes the product and she really understands kind of how to use it because it really talks to her. It's really simple. Usually the migrants use WhatsApp. And so the way that these Hawala networks work is through WhatsApp, it's through messaging apps. So we're trying to mimic the same experience as they would have in WhatsApp. The first thing that they ask is, what's the rate? And so in the app, the first thing that they see is the rate, and we follow the kind of like the same steps. And so, yeah, she's out of the Colombian banking system. She doesn't have a foreigner ID. A lot of the times these people, when they migrate a country, they leave without IDs, especially because the Venezuelan government, or even many Latin American governments are inefficient with how fast they issue IDs or passports. And specifically with the situation, a lot of people, out of the 6.5 million migrants, a lot of them are just without ID. So they're like ghosts in where they arrive. And so, of course, banks have a hard time, banking them and, doing KYC, and they have all these processes that they have to follow. So it's just really hard. There's no match between the needs of the migrants and what the banks can offer. And so for me, what was demanding, like what was interesting to see building Valiu so far is that the Venezuelan migrants are really in need of digital financial services, and it's not like they're happy with like the Hawala networks that they use currently. They're always looking for something better. They're actually looking to get bank accounts, a lot of them, but it's and they're well versed in basically the expectations that they have from financially. It's interesting because it's not like we're just trying to, you know, tell them, hey, you need this. They're telling us, hey, I need this, but there's nothing, no one that can provide it for me. And so they're also pretty loyal. Once they like use the product, they really stick with it and they defend the product and the financial service. So that's something that has been really interesting because we thought it initially that once they started using Valiu, if somebody else from the black market would came with a better rate, just to like try to compete, they would just run through following the best rate. But they start to get married with the brand really well, and they defend the brand because we provide them safety. They know that their money is safe when they send it to their family. It arrives to their family fast, and sending money fast is super important in the remittance space, because especially in Venezuela where the money is hyperinflated. So if my mom in Venezuela needs money right now because she has to go pay medicine, right now the cost is 1, but if I send her money and it arrives tomorrow, the cost is 2. So what I send her is not going to be enough. So being fast is important. And so far, in terms of kind of like the financial and technical literacy, the second point that I mentioned here is it's incredible to see how fast they learn. And because they learn so fast, they also little by little they start asking more and more from the company, which is really good. And they have these high expectations, even though they're people that are traditionally not with good education and many things. So definitely it's a good sign, I would say, for, you know, banking these next billion users. And in terms of the guys at IDEO also asked me to share some of the hot takes that I have regarding a recession. And so, you know, in Venezuela, for example, this is an interesting case because we think that many governments will start to do the same, and CBDCs, you know, central bank digital currencies will start to rise really fast because now there's a need to deploy capital. In the case of Venezuela, it's not the greatest example because, you know, the government is the Maduro government is a communist government, and they're trying to control the whole economy through a cryptocurrency that they created. But we think that there more and more countries will start copying this, create their own CBDCs, and start deploying capital to people digitally. And so we're going to see a lot of airdrops. I also believe that the Fed in the United States will accelerate the launch of the CBDC. One of the most important things that we are working on, and it's a hot take, but at the same time, it's pretty evident that if we want to bank the next billion users, at least in Latin America, we have to provide them a stable asset so that they can actually save in that. And most of the Latin American non-banked users already know this. The dollar is kind of like the ultimate store of value. Everybody in Latin America knows and believes in the dollar as the best way to save money. So Venezuela, Argentina, and now Peru are countries that are informally getting dollarized. And this means that all the dollars that are in circulation are very much in cash. And and you also have Ecuador and Panama, who are formally dollarized in Latin America. So we're seeing a trend where dollarization needs to happen for providing stability. The problem is that if the dollarization is tied to the United States Federal Reserves, then the Latin America will depend entirely on the United States, right? So the type of dollarization that we are betting on that has to be a little bit more decentralized, or at least provide savings pegged to the dollar, pegged to the value of the dollar, but are not depending on the Federal Reserves. So definitely this recession will accelerate that dollarization, and it's already happening, not only in Latin America, but we've read also in Southeast Asia. Crypto trading volumes are growing, definitely in Latin America, especially local. There's a difference between exchange volumes and local trading volumes. And locally, we've seen an increase in local Bitcoins, which is one of the exchanges, like peer-to-peer exchanges, that is most widely used in Latin America. As soon as the recession started, the volumes started peaking, and so we're starting to see a lot of people actually moving into dollars, but also moving into crypto from fiat currencies in Latin America. My last hot take is that not only new payment methods will be enabled, and so people will start, accepting different types of payment methods or paying through that. But at the same time, I'm sure that even barter, things like barter will start to happen a lot more now. I've seen a lot of companies entering in that space where you can actually trade and barter with people without using money, and just trading your patrimony, what you have at home, things that you don't use anymore, and start, exchanging needs. In Venezuela, that happened when we went through hyperinflation and money was not worth anything, and people just started trading things. I'm moving to Argentina, I have a bet. I'll give you my bet and you make me a website because I'm gonna sell, shirts in Argentina. And so these type of trades will also start to arise because, money will be more scarce. People will want to save and they don't want spending in other places. So, so yeah, those are my hot takes.
Thanks, Simon. That's really great. Super interesting. To learn more, follow Simon at Simon Valiu. So we're just running a little short on time, so I want to make sure that we jump into our last speaker, Will from Celo, who can share a little bit about what he's working on and this is our last speaker before we jump into our virtual brainstorm.
Awesome, thanks for having me. So my name is Will. I work at Celo, on a project, and it's actually some interesting context about me. I spent a little bit of time at IDEO.org working on the economic prosperity team, a little bit of time at the Gates Foundation on the agriculture development team, and some time in Kenya as a country director. So really cool to be here. A lot of those experiences have informed my current work at Celo. Next slide. Yeah, so Celo is an open platform that makes financial tools accessible to anybody with a mobile phone. And so we have a full stack solution. It's a blockchain and then an application on top of that blockchain. It's a wallet app. Really, that's underpinned by this thesis that, despite a lot of the benefits of cryptocurrency, we haven't seen as widespread adoption as we would expect. And we believe that part of that reason is there are a lot of frictions around usability, right? So some of the technological innovations that Celo has introduced are really around lessening those frictions. So we have a stable coin that's pegged to the US dollar. We have a phone number mapping protocol that means you could send Celo to anyone's phone number. It's as easy as sending a text message. And we have things like an ultralight sync, which makes the protocol really suitable for low-end devices and places with a lot of low connectivity. Next slide. Cool. And so the great thing about Celo is it's an open protocol, and there are a lot of really cool potential use cases for Celo. Really recently, about 3 or 4 weeks ago, we were actually in Nairobi conducting a pilot around micro work. And we'd love to talk a little bit about that pilot and some of the people that we met. So This is Lillian. She's a nursing student studying at Kenyatta University, right inside Nairobi. And like many of her classmates, Lillian is one of the biggest things on her mind is how is she going to find a job when she graduates? So the official stats in Kenya are youth unemployment is around 35%, but most people feel that is a low ball, right? The unofficial stats are much higher. And as a result, Lillian and many of her classmates have turned to online work as a way to fill that void. So in our pilot, about 2/3 of people have done some sort of online work in order to earn income. And online work can vary. So there's some things from anywhere from like simple tasks. Like if you ever built that one of those CAPTCHAs where you hit all the stop signs in a thing, online work basically. And so we were testing how could you create a platform where you could do this work on your phone and earn money in crypto, right? What's interesting is despite a lot of positive trends in the online work industry, for example, the proliferation of smartphones and laptops around the world and the growth in AI companies that need this kind of work done, we haven't seen as much of the opportunities flowing to people like Lillian in places like Kenya. And one of those reasons is because of the frictions in the financial sector, right? So if Lillian were to work like 5 hours in a week and earn about $5, to get that money from the US to her account in Kenya, through the traditional rails like PayPal or TransferWise, it could take 1 to 2 days. The cost to send those payments could be even greater than the principal amount itself. And so that's just it's cost prohibitive. So we were testing what it would look like to do the work on your phone and to earn money in Celo directly to your phone for fractions of the cost and with payments instantaneously. Next slide. So this is kind of a busy slide, but one of the biggest takeaways we had was how much demand there was for something like this. We were very surprised. We asked our participants in this 1-week pilot to do at least 10 hours of work on the phone. But as you can see, that was, most people far and away exceeded that. I think we had an average of 24 or 25 hours worked. One person spent 51 hours during the week working on their phone to earn income. And this is on top of other responsibilities like classes and jobs. So we were really surprised by that. Yeah, and I think that there's an intangible aspect of hustle that we were really surprised by. The amounts of tasks, we varied the cost of the tasks, right? So you could earn anywhere from 20 cents per hour to, I think on the higher end, $2 per hour. And at every price point, there was a huge demand for some of these tasks. Next slide. And the last thing I would say is just in the context of the COVID crisis, I think there's a really interesting opportunity that we're seeing, right? Because you can imagine that not only will there be a lot of economies that are facing recession and a lot of people who are in need of jobs, but entire countries are going on lockdown right now. I think India just announced a nationwide lockdown of 1.2 billion people. And so imagine the opportunity to earn income on your phone from the safety of your home could be a lifeline for a lot of people. And so I'm really excited to be working on this project. Thank you guys for having me here today to talk about it. Happy to stick around and answer any questions. Yeah.
Great, thank you so much. That was really interesting. And yeah, I think we are running a little bit late on time, but if you guys would stay on for maybe another 5 minutes, we'll see if anyone has any questions. So now to the fun part. If we would all pull up our browsers, or if you have Figma, go to tinyurl.com/billionbrainstorm, and you should be able to jump right into our interactive portion of this brainstorm. So I'll give folks a couple of minutes. Panelists, feel free to do this too. It'll be super fun. And I'm going to switch over really quickly. You guys see my screen? Cool. All right, so see if I can zoom in. Okay, yes, I can. All right, perfect. So the first thing we'll do, we're going to do a really fun little warm-up exercise called Where Are You From? So if you would grab a little green dot from the corner, can't see the little green dot right here. Yes. Drag one and let us know where you're from. It'll be fun. It'll be a fun exercise to see where everyone is from. I'm not sure I can find me, but here you go. And panelists, feel free to jump in as well. You're, I think, on mute right now, but you can unmute yourself. Cool.
While we're doing this, if anyone wants to raise their hand and ask a question to the panel or talk about where they're from and the unique problems they see in their location, I can unmute you. Oh, looks like we've got one.
Ed Milson. Mm-hmm.
Yeah.
Ed.
Go ahead, Ed Milson. Unmute.
Hey guys, can you hear me?
Yep, go ahead.
Just to say that I'm from Recife, Brazil. Okay.
Cool.
Put a little dot there if possible. Thanks.
And what's your interest in fintech, crypto, financial inclusion?
Our product, it's called Love Crypto and Earn Crypto.
Sorry, I think we're having connectivity.
We were born at an IDEO hackathon, and we are the.
Yeah, sorry, Ed. I think you're cutting out a little bit. I can't hear you. But I believe he said he's from Brazil and working on a project called Love Crypto. Very cool. Cool. Are people still looking up the map, trying to figure out where their country is?
Yeah, maybe we should move on to as people finish out where they're from.
Mm-hmm.
Let's move on to the brainstorm.
Sounds good. So feel free to continue putting the dots where you are. So I think what we're going to do next is, Joe, do you want to introduce this?
Sure. So on the right, Tara's showing you these yellow Post-its. There's kind of templates for the problems that you want to solve. So we can quickly do those and drop them into different regions across the world. And then if you put your name or raise your hand, we can have you share that.
Yeah, so fill in the Post-it and feel free to drag it to where you are. I'm not from Australia, fortunately, but I love the place. Yeah, and feel free to tag a collaborator too. If you know of any projects or foundations or companies you would love to partner with, feel free to put them in.
So I'm dropping one in that I think is global in nature, but I will put it in Asia because that's where we're starting with this, which is the idea of shared agent networks. So I spoke to this a little bit at the beginning of the session, but I think one of the reasons that rural populations in particular are underserved is because it's so expensive to get to them. And so we've got all of these different agent networks for specific organizations, and it's really expensive to recruit, maintain, and operate these networks. So rather than going it alone with literally hundreds of different agent networks in different countries, why wouldn't we start to combine those and share those resources to reduce the cost of service?
Cool. Does anyone have anything to add from the panelists, or if you were an attendee, just raise your hand and we can unmute you. Some cool things happening over here. Does anyone want to speak to this?
I can talk about
High
the
cost of sending remittances.
Yeah.
Yeah.
I think those were just the quick, very relevant to the case I highlighted. The financial frictions in sending payments internationally and the lack of income generating opportunities, I think, are especially pronounced in places like Kenya, where there's a lot of talents and a lot of opportunities to do global work. But the frictions prevent us from, I guess, closing the world and making those connections stronger.
Well, did you write this one too? The rise of super platforms?
The top two, yeah.
Huh?
Just high cost of setting remittances and lack of income generating opportunities.
Oh, cool. Yeah, I was just curious about this one. If anyone who wrote that post-it would love to chime in, that would be interesting to hear from you. Cool. All right, some other things in South America we can jump to, in North America. Let's start with here. Cool. Does anyone want to speak to this? How might we help individual creators connect to the global economy and be fairly rewarded for their work and contributions to the world?
This is Ian, as you might expect to be from me. I mean, I think that one of the things that we're looking at a lot here in the US is just how non-traditional forms of employment and income are going to be more important, especially I think in times like these. And so we need to think very creatively about what contribution means and how people are fairly compensated for the value that they're contributing to their communities, to the world, to people. And crypto has some interesting opportunities there in terms of this emerging creator economy and how to support that.
Cool, thanks for sharing. Here. Does anyone want to jump in? Simon or Ale? I saw him as well.
Yeah. So the exercise is to answer or provide some insights into the questions, or
yeah, just sort of any interesting sort of use cases or problems you think need to be solved in that region as it pertains to financial inclusion.
Yeah, totally. So I mean, most of these are really tied to kind of a similar problem, which is, some governments don't allow people to move their money across borders. It's because they basically they have currency kind of capital controls. And this is very, very common, especially in authoritarian governments. But at the same time, because they have capital controls in most of the cases, because their local currency is not strong. So most of the citizens that live in that country don't have a safe or stable store of value, right? So I guess that one of the things that, in my opinion, cryptocurrency, either direct access to cryptocurrency, such as stable coins, or indirect access to cryptocurrencies or decentralized store of value, can definitely tackle both those problems. And so, yeah, we've seen a lot of adoption of stable coins in Latin America. And because of the dollarization I mentioned, I think at least in our effort is to abstract the fact that we use crypto in the backend to actually hedge to the price of the dollar, provide a digital dollar that people can save in, and that can also be transferred to any Valiu user, and it doesn't matter where they are in Latin America. So so yeah, that's one of the main challenges, and we're starting in Latin America, but I think that this applies to Southeast Asia as well and Africa. So
Yeah, I'm curious, Dave, as somebody who's not in the crypto world, when you hear about the promise of stablecoins, what do you think? How does that? What do you think needs to be true in order for stablecoins to become a solution for the people that you've been working with?
Yeah, I guess like at a minimum, two things, right? One is the first impression or entry point to this whole system needs to be so much better than what exists right now, right? The language that we use and the UX around it, for people like me, it's super strange. It's weird. So there needs to be like a language translation service that needs to happen, right? But even beyond that, what I think needs to be what would be super interesting is how do you go beyond, or what do you build on top of the stable coin? That makes it super compelling, right? So it's one thing to have different variations or different form factors of money, but when it comes to finance, what are the different tools or mechanisms or jobs to be done that you can then do on top of that? Like that gets me interested. Yeah, those are the things I'd be down to look more into.
Cool, thanks, Dave.
Yep.
Cool. From the attendees, anyone has something to chime in with? Feel free to raise your hand. I think someone put something under Asia, which was quite interesting.
Everyone's afraid to speak up.
I see John, we should single him out.
Yeah. John, do you want to add anything? We're cold calling you.
Some interesting thoughts here as well around alternative sort of credit scoring systems or credit and lending systems, which is cool.
I think John's got something.
Cool.
Oh, sorry. I was just unmuting myself. Yeah, I think it was under the Asia category. I was just building on what Joe was saying in terms of, especially in a lot markets like Southeast Asia, where financial services and payments are bank-led. Just the challenge around both the types of organizations and incumbents, which are more risk-averse, around sharing agent networks or sharing access to certain types of regulated services. In order to really build kind of a richer digital ecosystem that spans multiple types of actors. So I think that's something that we've been struggling with. And then I was also the one that added the super platforms node on the Africa side, but I think we're seeing this, we have been seeing this trend where Africa is kind of a market where super platforms, these multinational digital companies, whether it's a Google, Amazon, or an Alibaba, are really looking to expand in different ways. And so I think the opportunities are things that are opening up in terms of digital services that are currently free, access to gig work that Will talked about, and micro work. But then also, because they're so huge and they dominate, some of the risks that appear as well in terms of the influence, the control, the data, around, yeah, again, in these markets where there isn't a lot of variety in the ecosystem to kind of check and balance those really big players.
Yeah, that's a really interesting point. Cool. It seems like there are a lot of overlapping problems between the different continents. I think if we had a little bit more time, I think what we would love to do is to try to synthesize them, because it feels like no matter where we are in the world, you know, a lot of the sort of use cases or opportunities we see around sort of new ways to generate income, new sort of credit lending systems, super platforms, they're all sort of, you know, informal financial networks, which I thought was a really interesting point, which is kind of related to shared agent networks as well. I think these are such great fodder to dig into. But thank you so much for joining us all today. I think what we would love to do as the IDEO team is to synthesize this a little bit. We'll wrap this up into a blog post and publish it sometime later this week or early next week. But does anyone have any last questions for our panelists? Stop sharing for a second. Cool. If not, thank you so much for joining us, and take care, stay safe, and see you soon.
Thank you, guys.
All right.
Thank you.
Thanks, everyone.
Bye, guys.
Next time, but Dave, well.